Hey guys, this is James, and I wanted to take a look at how RYLD performed against JEPI. What we are going to do is take the stats, the dividend yield, and the current growth of each of these different funds, see how they performed in the past since their inception date, and then see how they will perform in the future, taking the current data points that we have, and then seeing what portfolios would look like if we had a few $100,000 in either RYLD or JEPI. Let's come over to RYLD's page and see what they have on their page. RYLD is Global X's Russell 2000 covered call ETF. The reasons to consider RYLD: it offers a high income potential. RYLD seeks to generate income through covered call writing, which historically produces higher yields or distributions, dividends in periods of volatility. They offer monthly distributions, and RYLD writes call options on the Russell 2000 index, saving investors the time and potential expense of doing so individually. We come down to the key information here. The inception date was April of 2019. Looks like they have a few different expense ratios here, but we will use the 0.6%. It will not affect our calculation too much using the difference between these two numbers, so we'll use 0.6%. They claim their 12-month trailing yield is 13.7, and their latest distribution yield is 11.88%. Their current holding is the Vanguard Russell's 2000s ETF. Over on JP Morgan's website, we'll take a look at their ETF, JEPI. They claim that they seek consistent premium income with lower volatility, very similar to some of these other income funds like UYLD and RYLD. Under their results section, they say they provide an attractive 12-month rolling yield, and they say it is in the top 10% of these type of funds, and they claim it is competitively priced at 0.35%. If we take a look at their historical price, you can see they have growth and distribution. We'll also take a look at Seeking Alpha's data to check out an independent website for JEPI. But first, let's check out RYLD on Seeking Alpha. They claim their trailing 12-month yield is 13.12%, and their expense ratio is 0.6%. So we will use these two numbers. And taking a look at their NAV price, it looks like they entered the market at $25. They are performing call options on 100% of the funds, so they are not allowing the upside or any growth of the fund they're purchasing. So here today we are sitting at $23.20. So if you drew a straight line from the beginning of the fund to the end of the fund, it would be a negative CAGR or negative annual growth rate. So we will put that into the calculator and see what we get compared to JEPI. And on Seeking Alpha, RYLD claims that they're only holding, very similar to RYLD's fund page on Global X, their only holding is Vanguard's Russell 2000 ETF. Taking a look at the dividend history for RYLD, if you recall, the fund inception date was April of 2019. So their snapshot, it looks like it has dropped down to about 14 cents all the way up to about 31 cents in its short time span. Taking a look at JEPI, the fund inception date was around May of 2020, and you can see that there is growth with this fund, and the dividend 12-month trailing yield is 7.52%. The expense ratio is 0.35%. The holdings in JEPI, you can see the breakdown right here, with industrials, consumer defense, healthcare, and financials all being close to about 12%. Taking a look at JEPI's distributions, it looks like their lowest distribution was about 26 cents and their highest distribution is sitting around 54 cents. So there, again, with RYLD and JEPI both, there's a little bit of volatility with the dividend yield. However, we will use the 12-month trailing yield numbers from their summary page. So let's take a snapshot of what the history of these two funds would look like from fund inception date. If you were to invest $10,000 with no cash flow, no rebalancing, and having dividends reinvested, we'll also take a look at having them not reinvested. And then we'll take a look at what the income would look like with RYLD at 100% and JEPI at 100% in portfolio 2. With dividends reinvested, RYLD would have outperformed, going back from a $10,000 investment since the fund inception date of JEPI. Global X fund inception date was about a year earlier, but if we consider these two funds at a start date of $10,000 in May of 2020, RYLD would have outperformed JEPI with dividends reinvested. An overall CAGR number for RYLD, they are claiming it is 24% and JEPI is 18.19%. If we come down here, we can see that with that 13% trailing 12-month yield, RYLD would have paid more in dividends. Let's take a look at if we did not reinvest dividends. And if we didn't reinvest dividends, the funds start to converge here. If we had a $10,000 investment in May of 2020. And there's something I'd like to point out here, these CAGR numbers. We can see that the Russell 2000 fund has a CAGR number of 10.49%. That's because its starting date is May of 2020. Let's go back to the Seeking Alpha data and check out why we have such a high CAGR if the overall yield has dropped since fund inception date. We're back over on RYLD's page on Seeking Alpha, and you can see May of 2020, the fund was actually down to 18.66. So since then, if you drew a straight line from about here to about there, you would have a positive CAGR number, probably very close to that 10% figure on Portfolio Visualizer's website. So to be able to determine an accurate NAV number, we would expect a starting price of $25 and an ending price of about $23, and that CAGR number comes to about a -2 to 3%. So that's what we will use in our calculation. And with JEPI, 9.35% appears fairly accurate without having dividends reinvested. So we will take this number right here and use that for our CAGR number for JEPI. So with all of that being said, we have all of the numbers in here, the fund share price, the dividend yield, the expense ratios. We won't look at the monthly growth for now, but we put that CAGR number in for RYLD, and we took Portfolio Visualizer's CAGR number for JEPI at 9.35%, and currently we will not take reinvesting dividends into account. We'll start with a portfolio of about $300,000 to see how much you would receive in dividends. We will start with a portfolio of $300,000, and over here on the portfolio value graph for a 1 to 10 year snapshot in the future with using past data, we can see with the current way RYLD is going, your fund value prediction would be a loss of $80,000 in a course of 10 years. But over here you can see in the blue RYLD, you would have a fairly large payout of $40,000 on a month-to-month basis for RYLD. But as the fund shrinks, you can see the dividend payout will shrink as well. And that's if everything holds true with RYLD and their decreasing NAV price. And these numbers are calculated without reinvesting dividends. So this is if you had that high portfolio and you just wanted to gather the dividends from either one of these funds. And it would depend on how much dividend you would want to gather and how big your fund is. So let's say you had a much larger portfolio. Let's take a look at how JEPI and RYLD would perform. So after 1 year, your $1 million investment would give you around a little over $100,000 in RYLD, and you would have $75,000 in JEPI. But as you can see, JEPI continues to grow and RYLD's dividend continues to decrease. And this is what you would look like if everything holds true after 10 years. You would have $736,000 in RYLD and $2.3 million in JEPI if all these numbers continue as they were in the past since inception date. If all these numbers continue as they were since inception date. Now let's take a look at what these funds how they would perform if you did reinvest dividends. You can see JEPI continues to outperform RYLD, and over time, if you had $1 million in RYLD and JEPI, your RYLD would eventually be surpassed in dividend payouts by JEPI. And over here in these columns, we have an RYLD and JEPI to receive these monthly dividends. $10 a month in dividends, all the way up to $5,000 a month in dividends. This is what you would need in RYLD and JEPI to hit this target number. Same thing down here, 100 all the way up to $100,000 in annual dividends. This is how large your portfolios would need to be. These are your targets. If you guys like that, hit that like button. And again, this is just my analysis and my opinion. Please do your own research when you invest in these type of income funds. Everyone's investing strategy is a little different. And with that, thanks for watching.